FirstRand has released its half-year financials to the market today for the 6 months ended December 2024. The financial player reported headline earnings of 20.9 billion rand. That's up 10%, with return on equity coming in at 20.8%, within the group's target range of 18 to 22%. The board has resolved to declare a gross ordinary dividend per share of R2.19. Well, to take us through the various operations and to give us the backstory to the numbers, I'm joined by Mary Vilakazi. She's the CEO of FirstRand. Thank you very much, Mary, for joining us. So let's start with the big one, FNB. How did the bank fare in the period under review against the backdrop of lower inflation and an improved interest rate environment?
Thanks very much for having me. FNB grew earnings by 6% over this period. And I think for us, it's actually a better performance than we expected. So one thing that we didn't do over the last couple of years, of the last reporting periods, when interest rates have been very high, so this is when the repo rate was at about 8.5, we still continued lending. So we didn't pull back from the market. So what that actually does is that the impairment charge, so this is what you set aside for any future credit losses, so that increased. And then also because I think consumers were under strain, we started seeing inflows of customers under pressure. So the credit losses for FNB actually have been rather high. That came through the second half of our financial year, less in the 6 months by December 2023. So if I consider that for the 6 months that took us to the end of June 24, the impairment levels have gone up significantly. They've started coming down. So 6% might look soft because impairments are up 8% against a softer base last year. But what's pleasing to see in FNB is that the non-interest revenue is holding up, and I think it's grown well. The insurance business is doing well. The net interest income was softer because a lot of the lending went into the FNB commercial base, less into retail and less into unsecured, which would have supported the margin. And then I think the most impressive outcome of our results is that overall, the group's cost-to-income ratio is 48.9% and driven largely by FNB. So FNB was able to flex the costs when they saw top line being under pressure. So under the circumstances, I think a good outcome from FNB. The ROE, I think, remains impressive, and I think just speaks to the quality of that franchise.
Now, your car loans business, WesBank, saw an increase in vehicle finance advances of 6%. That space seems quite tricky at the moment, given that consumers have been struggling to buy high-ticket items and they're choosing to keep their cars for longer. What were your observations there?
Yeah, certainly in line with your observations. I mean that the new car sales market is not growing. I think if you listen to a lot of the commentators on that sector, that's not growing. What we do see growth is in the vehicles that are used for commercial purposes. They're lightweight trucks, and WesBank is capturing its fair share. WesBank has also decided a few years ago to also focus on more affordable cars, because people were now switching from more expensive cars to more affordable cars. So they started also doing that to make sure that we can still support the customer needs. But if I step back and I look at WesBank's performance, it really is an excellent performance. I think that the teams have stuck to supporting needs. It speaks to how strongly it speaks to the strong distribution capabilities of WesBank and just a discipline of pricing, because I think it's very competitive by the banks. So it's quite easy to have that margin go down for the little business that is available. And that's not what the WesBank team has done. So I think a pleasing performance with very good returns from that business, and I think a very focused leadership team that is doing what they can to support clients.
Yeah. So when it comes to RMB, what have you been seeing in terms of an appetite to fund big development projects in the area of energy and maybe other infrastructure developments on the continent, mergers, acquisitions, and other business areas that that particular business covers?
Yeah, so at least I'm pleased that in this 6 months, we are starting to see signs of appetite for lending, for infrastructure. I think energy has obviously been one that we've been financing for quite some time. That hasn't stopped. We are seeing a variety of opportunities for lending here, in South Africa and also in the rest of the continent. So I think the one of the things we highlighted actually as part of the results, so I think we're participating well in the sustainable financing. We have teams that have been working on unlocking some of these projects, and now the economic reforms are starting to unlock some of the areas where private sector can come in. So yeah, the RMB teams are really well placed to capture any of the growth that comes. The advances growth is very strong. And so one of the things that they are now going to start focusing on is making sure that they facilitate the deals and make sure that the assets that they get, so you would lend to a corporate and make sure that ultimately that loan sits perhaps on a pension fund or in a fund that's looking for long-term assets, because our balance sheet capacity at some stage, if I look at the demand that's going to come, if I look at the opportunities, we don't want to get to a place whereby we don't have enough capacity. But it's a very good problem to have to solve for, Nompu, because it means that there are growth opportunities. So I think what's important for South Africa is to really continue being on track with reforms and accelerate them, particularly in transport and logistics, because there is a lot of private sector and economic activity that will get unlocked there. And I think that will speak to RMB. So in this period, the other key thing that that I think we've highlighted in the results is that they've been able to generate quite a significant amount of structuring fees, corporate finance fees from some M&A. So that category of fees, we call it knowledge-based fees, has gone up by about 55% in this period. So yeah, so pleasing to see the activity at last.
So you did touch on what I want to ask you very quickly, Mary, as we wrap up. What is your outlook for 2025? Of course, you referred to reforms, but just expand on that.
Yeah, so outlook for 2025, look, we think given what's happening globally, global inflation is likely to be more sticky. And in South Africa, we think that, I think obviously SA inflation is really well managed, but we think that we've hit the bottom now. So in terms of rate expectations, we think there may be one or two more coming, but then that's it for quite some time on the rates coming down, which means households will get some relief. But I think not to the extent that we saw real credit extension a couple of years ago. Okay, but it will be an improvement. I think it will be a good story for credit and I think some capacity by households to lend. Corporates and small businesses, I think if the economic reforms carry on and I think we've got water as a country to also just start prioritizing now in addition to energy and logistics, all those will unlock activity for smaller businesses, and FNB is playing a very big role in supporting those customers that are likely to be able to benefit from reforms. Actually, our SME lending over this period has gone up by about 19%, and I think FNB is actually the lead banker for SMEs in South Africa. So I think we are betting on the fact that the reforms will take place and that the trickle down will go to small businesses, because we know very well that is the heart of the economy. So that's really where we're allocating resources. And as I said, I think in RMB there are lots of opportunities they're seeing. So looking forward, I think it will still be a corporate and commercial led cycle, and our franchises are really well positioned to be able to continue capturing that growth. All
right, Mary, thank you so much for your time and your insights around the results, your half-year results there. That was Mary Vilakazi. She's the CEO at FirstRand.